There's not going to be a whole lot of economic data for us to pay attention to. If I look at EcoGo, we do have some wholesale inflation numbers coming through tomorrow, for instance, Michigan sentiment numbers as well. How much is this going to drive the short-term trading as we wait for some of the bigger numbers to come through?
Well, first, I want to challenge your issue on data dependence. I can't imagine anything that's going to happen between now and that December meeting, unless it's a massive exogenous shock that's going to put December in play. I think that right now the Fed is trying to say is, no, we actually believe that we are moving one in December. The only debate is it 2 next year or 3 next year? And if the Fed does waffle on any economic data, I think it undermines their credibility.
Julia, you see 2 more hikes, December, March, and then what, pause and reevaluate?
Yeah, I think that the plan has been moved steadily towards a neutral stance. And beyond that, they're being very vague and, again, referencing the data dependence. And our expectation is that some of the slowdown we've seen in the global economy is contributing to some of the added volatility and correction that we've been seeing in the markets, and that kind of process is going to continue. And that's a signal to the Fed that they're getting closer to a neutral stance. We don't know exactly what a neutral stance is. We have all these cross currents from fiscal stimulus and trade wars, and how all of that nets out is what they're trying to look for in the tea leaves of the data. And we think that some financial tightening will come forward and let them know that after a couple of rate hikes, we are closer to a neutral stance.
Neutral stance. It's interesting that Julia brought that up because in early October, Jay Powell said interest rates are well below the neutral rate, and there's a pretty meaningful market reaction, maybe even overreaction to that. No one's walked it back or clarified it or anything like that. Is that a surprise? They have in the past when they've gotten an extreme reaction.
Yeah, frankly, I'm really surprised that the market sold off, roughly 10% since that Powell comment.
Yeah.
And kind of getting back to the point I was making with Tom before, we're going to look at the shape of the yield curve. Right now, it's actually been a bit steeper. But if the Fed continues to move 3 more times or 4 more times between now and the end of the next year, if they start to see the curve invert or really flatten towards zero, I think that they're going to back away. I don't think they're going to want to basically play chicken with the market. And the market is going to tell them that they're not happy if that happens.